My name is Rick Wass. I've spoke before several times at this church. I was the Illinois delegate to the Continental Congress that was held in 2009. I too have spent the last 15 plus years studying the income tax, not only studying it, but battling firsthand in the courts, both Illinois and federal, on a state level, federal level, all the way to the appellate courts, both in the state and the federal level. So I studied extensively. Most of my learning was from the same sources as Mike's. You know, I worked on a case with Larry Beecraft. He's one of the biggest attorneys on the income tax in the United States. Tommy Cryer I spoke with, heard him speak many times, read his material. I've read the book, Constitutional Income, Do You Have Any?, which is Phil Hart, the Idaho State Representative. Phil was an interesting story. He went back into the congressional record, spent months reading the congressional record to find out what were they discussing at the time of the income tax. And that tells you exactly, and amazingly, you'll find that nowhere in that discussion was there anything about taxing labor or the wage earner. In fact, the first income taxes were titled a tax to bring relief to the wage earner. Can you believe that? That's because when Rockefeller or J.P. Morgan or Warburger, the 100 millionaires in the early 1900s, late 1800s, walked in to buy something in a store next to the filthy ditch digger who was out in the street all day digging ditches, they both paid the same tax on an imported tea or the same tax on any good. And this wasn't right, that these super rich weren't paying their share of taxes or the same as the ditch digger. So the income tax was actually brought on to bring relief to us, the wage earners, the ditch diggers, and tax the super rich who were being protected by the government. Well, the super rich were smart enough to take the law and turn it exactly 180 degrees to mean exact opposite today of what it was originally intended. Also, Tommy Cryer, an attorney he was talking about, he discovered and researched the proposal of, or the doctrine of law, that the power to tax is the power to destroy. That means if the government can tax something, it has the right to destroy it. So, we're watching that today with cigarettes, an excise tax. The government wants to destroy smoking, so they have a 400 or 500% tax on it. They could run it up to 1,000, 10,000%. They could tax it out of existence because they have that power. Smoking is a privilege, it's not a right. So they could tax it out of existence. Now let's talk about your right to work. Can the government tax you so high, say like 100%, that you can no longer work? They take your entire check? Well, you don't need to be a genius to say, no, they can't do that. Well, then they don't have the power to tax 1%. Because if you have the power to tax 1%, you have the authority to tax 100%. And they can't do that. Therefore, there is no authority for them to tax your labor. Also, another doctrinal law is one part of the Constitution cannot negate another part. That is long held by the Supreme Court, all the courts. You cannot take one part of the Constitution and use it to negate another part. Well, if the Fourth Amendment says you have the right to be secure in your papers, your house, your person, and effects, and that you don't have to show your papers to anybody unless you committed a crime and the government gets a warrant to come in and force you to show it. Okay, that's your Fourth Amendment right. Well, then the 16th Amendment cannot negate that. They cannot claim the income tax now means we look at every part of your books and records, your papers. Nothing is private in your life, your bank accounts, what you do for work. You better bring in your tax return. You better hold them for 7 years. So we need to look at them 6 years from now, 6 years later or 7 years later. You better have them or you'll go to jail. How can that be when the Fourth Amendment says the government can't look at the federal government can't look at any of your papers? That's because of the misapplication of the income tax. It has no application to a citizen living and working in 50 states. It cannot negate your Fourth Amendment right, nor your Fifth Amendment right to self-incriminate yourself. When you sign a tax return under penalties of perjury, That is a self-incriminating document, and it has been used thousands, if not tens of thousands of times, to convict people. Their own signature on the, where you swear under penalty of perjury. Well, you cannot be compelled to be a witness against yourself, so how could you sign a tax return under penalties of perjury if you cannot be compelled? That's because the income tax has no application to a citizen living and working in the 50 states. It cannot, one part of the Constitution cannot negate another part. Now, that's all I wanted to say in addition to what Mike covered. I thought it would be great, since he covered a great history of the federal Constitution, that I would now talk about our state, the federal tax, and, well, and the Constitution. I would now talk about our state income tax, because we have an Illinois income tax here, and it's very interesting. Everybody have that sheet I just handed out to you? Okay, I put little arrows. It's a whole 5-page article I wrote a short time ago when the big debate was about raising the Illinois income tax. I'm not going to go through the whole thing. I just put little arrows at the points I'm going to cover. The first arrow on page 1 there, this is the actual law imposed. On the federal level, the income tax has some 9,000 pages to it. The Illinois one is quite simple. There's only one section that imposes the tax. It's one of the very first sections, and it says, tax imposed. In general, a tax measured by net income is hereby imposed on every individual corporation, trust, and estate for each taxable year ending 1969, blah, 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 on the privilege of earning or receiving income in or as a resident of the state. So there is the only section that imposes the tax. It's on the privilege of earning or receiving income. Well, these words mean something, and we need to find out what they mean. And before we dive into what they mean, we need to learn some rules of interpreting statutes. And one of the rules, if you go down to the next arrow on page 1, this is the Illinois Supreme Court, the highest court in Illinois, talking. They said, after this court has construed a statute, that construction becomes in effect a part of the statute, and any change in interpretation can be effected by the General Assembly if it so desires to do so. Okay, there's another case underneath that I won't read, but it confirms that, and there's many cases. So in other words, when the Illinois Supreme Court analyzes an Illinois statute, that's the end of it. Their interpretation becomes the final word unless the Illinois General Assembly wants to revisit it and redefine it because they didn't like what the Illinois Supreme Court said. So in 1969, the income tax was brought up in Illinois. That was the first time. This is like some 50 years after the federal. And this went immediately challenged, go to page 2, immediately challenged to the Illinois Supreme Court. It shot right up there the same year. And it's a case called Thorpe versus Mahan. And the Illinois Supreme Court analyzed exactly what the income tax is in Illinois. And this analogy will be as follows. It says, they're talking now, they're analyzing, they're saying, many, perhaps most courts hold that a net income tax is to be classified as an excise. They're kind of measuring this. Well, listen, there's a few states that say it's some sort of property tax, but most interpret an income tax to be an excise tax. A little further down in bold at the next arrow, they continued, they said, the view generally taken is that an income tax is not a tax on property, but is more within a category of excise taxes, and that a tax on income is not a tax on the source of income. Interesting. So they've concluded that one, the income tax, is an excise tax. Now, excise tax is synonymous with privilege tax. Privilege, excise, they are synonyms. They are the same word. And if you recall what we just read, the tax was imposed on the privilege of earning or receiving income. So it is, in fact, a privilege tax, which is an excise tax. So it's on some sort of privilege. They also said that it is not a tax on property. The income tax is not a tax on property. And thirdly, they said that it's not a tax on the source. The income tax is not a tax on the source, where the income's coming from. Okay, so those three things, they've concluded now. Now further down on page 2, the other arrow, this is continuing in the same analysis. It was a long, detailed analyzation of the income tax in Illinois in 1969 by the Illinois Supreme Court. And they referred back to Flint versus Stone Tracy Company, which Mike brought up and showed. Flint versus Stone Tracy Company was a challenge to the corporate income tax of 1909 on the federal level. And it was completely accepted tax because it was a tax on corporations, which was a privilege tax and excise tax. And they referred to that, the Illinois Supremes referred to the Supreme Court's analyzation of the corporation tax in Flint versus Stone Tracy Company, and they said, the tax is laid upon the privilege which exists in conducting business with the advantages which inhere to corporate capacity. Oh, so they tax the corporations as privileged because there's certain advantages to a corporation. And which are not enjoyed by private firms or individuals. Oh, so we're taxing a privilege that is not enjoyed by individuals or private firms. Okay, these advantages are obvious and have led to the formation of such companies in nearly all branches of trade. Okay, so everybody's incorporating for some benefit. And then they go on to list these benefits. He says, the continuation of a business without the interruption of debt. So somebody dies in a corporation, the corporation goes on. It's not affected. However, if you're a shoe repair guy and you die, there goes the whole business. So the corporation has these advantages. The corporation can be transferred, shares. So you want to sell the corporation or your business, you can just transfer shares, makes it very easy. There's an absence of liability. When you have a corporation, you personally are not liable. So you know your business damages somebody, and you want a copy of the sheet? Oh, another copy. There's a stack here. Here we go. Anybody who didn't get one, I got copies here. So there's a general absence of liability individually. So the corporation can be sued, but they can't come after your personal assets. So there's a big benefit to this corporation now. And they go on to say that these advantages do not exist in a private individual or partnership. It is distinctive privilege which is the subject of taxation. So it is this distinctive privilege which is the subject of taxation. Okay? Operating in this privileged corporate capacity. Nothing whatsoever to do with the citizen working in Illinois. This is the Illinois Supreme Court. They're analyzing it soup to nuts exactly on what this income tax is. Now go to page 3. Now, they've concluded now. Let's recap. The income tax is an excise tax on privilege. It's not a tax on property. It's not a tax on the source. It's a tax on a privilege for doing business in a certain corporate capacity, like a franchise or corporation, because of all the benefits. Okay, the Illinois Supreme Court, they're the last word. What they say is interpreted, that's it. It's part of the law now. So now, let's find out what is your labor. Mike touched on this. At the first arrow on page 3, everybody on page 3, there's the first arrow off to the left there. This is from a doctrine of law, long established back in 1900. 69 years before the income tax. It says, labor is property. The laborer has the same right to sell his property and to contract with reference thereto as any other property owner. Labor is property? Well, the income tax is not a tax on property, they said. So if labor is property, then the income tax in Illinois is not a tax on your labor. 1892, going back even further, this doctrine of law is well established. The property which every man has, the property which every man has in his own labor, as it is the original foundation of all other property. So it is the most sacred and inviolable. Wow, not only is it property, but it's sacred and inviolable. The enjoyment or deprivation of these rights constitutes the essential distinction between freedom and slavery, between liberty and oppression. So they're saying your labor is your most sacred and inviolable property, and if it was to be disturbed or taxed, that would be the difference between freedom and slavery, between liberty and oppression. So the way it is being misapplied today has put us in slavery, has put us in oppression that we did not have before 1969 in Illinois, where your labor was recognized as your most sacred, unalienable right. Going down to the next arrow, that's the third arrow on the left side of page 3. It says, the right of a person to sell his labor upon such terms as he deems proper, it is in essence the same as the right of the purchaser of the labor to prescribe the conditions upon which he will accept such labor from the persons offering it. Ooh, that's the United States Supreme Court saying that in 1908. Again, long established principle. You have the right to sell your labor. Your labor has a value. Like Mike was saying, when you work for somebody, you say, listen, I'll give you 40 hours of my labor, you give me $1,000. But I'm not going to give you $2,000 of my labor. I'm going to give you exactly $1,000 of my labor, and you're going to give me $1,000 in cash. It is an equal exchange. You merely contracted and sold your labor the same as you sold a CD. This CD cost me $1. I'm selling it to you for $1. There's no profit, there's no gain, there's no income, there's no reporting. It's an exact exchange. Next arrow down, the property which every man has in his own labor, as it is the original foundation of all other property. So it is most sacred and inviolable. Now, the Illinois Supreme Court said that, and lo and behold, here's the United States Supreme Court saying the same thing. The two highest courts in the general government, the highest courts in Illinois, saying your labor is your most sacred and inviolable property, an unalienable right, a natural right, the Declaration of Independence, the laws of nature, nature's God, unalienable rights. That's the law we live under, and your labor is your most sacred because it's the foundation by which you acquire everything. We couldn't acquire these chairs, this carpet, this table, the shoes you wear, if somebody didn't work and use their labor to get money so they can go buy it. So it is the most sacred, the most inviolable of all your rights because you couldn't even exist without it. The last arrow on the left, on page 3. The principle is fundamental and vital. Fundamental, that means basic, unalienable. Included in the right, this is a very big labor case at the United States Supreme Court. It says, included in the right of personal liberty and the right of private property, partaking of the nature of each, is the right to make contracts for the acquisition of property. Chief among such contracts is that of personal employment by which labor and other services are exchanged for money and other forms of property. So you have an exchange here. First of all, they're saying it's your most sacred property, and you're merely exchanging that property for an equal amount of something else. Somebody can pay you in chickens if they want, but they'll only give you the equal amount of chickens to which labor you did for them. So there is no profit, there is no gain, and as Mike pointed out in numerous cases and doctrines of law, if there's no profit, there's no gain, there's no income. There has to be some sort of profit. Now, you want to lay around on your couch, watch TV, and have the government send you money for doing nothing? Maybe that's a profit. I would think it would be. Yeah, I would think that's a profit. But you go out and you work for it. I don't care how easy that work is. I don't care if you're a lawyer getting $600 an hour for sitting with your feet up and talking on a phone. That's your labor. That's what it's worth. It's an equal exchange. That's simple. That's not my opinion. That's the opinion of the Illinois Supreme Court. That's the opinion of the United States Supreme Court. So, what can we conclude now that we knew the rules of statutory interpretation? We can conclude that 1, labor is property. okay? And that the Illinois Supreme Court said an income tax is not a tax on property. So it's certainly not a tax on your labor. And two, the Illinois Supremes have declared that the income tax is not a tax on the source of the income. And when you go out to work, you are the source of the income. So when you go to work and you get paid, you're the source of that income. And the Supreme says this is not a tax on the source. So how can they tax you? Well, they can't through any legal means at all, only, as Mike said, at the barrel of a gun. And so we concluded these two things by what the Illinois Supreme Court has taught us. Now we'll go down to the next area. We're on page 4, in the middle of the page. This is a Illinois Supreme Court case from after the Civil War in 1878, and it says compensation for labor cannot be regarded as profit within the meaning of the law. The word profit, as originally used, means the gain made upon any business or investment, a different thing altogether from mere compensation for labor. So here this doctrine is like, 150 years old now, that compensating you for your labor when you work is not income within the meaning of the law. It is not profit. Not at all. A little further down the page, the next arrow, this is the Supreme Court of Tennessee, just so you don't think Illinois is nuts. Let's see what the Supreme Court of Tennessee said in 1960, much more recent. It said, it cannot be denied that the legislature can name any privilege a taxable privilege and can tax it by means other than an income tax. But the legislature cannot name something to be a taxable privilege unless it is first a privilege. Since the right to receive income or earnings is a right belonging to every person, the right cannot be taxed as a privilege. Well, is your labor a privilege or a right? Seems like in every one of those cases I read, it says included in the right of personal liberty, the right to labor, the right of a person to sell his labor. They keep using the word right whenever they refer to your labor. It's a right, the opposite of a privilege. It is not the subject of the Illinois income tax. Only privileges are. Page 5, the final page. This is now the Supreme Court of Oregon in 1930. And they said, this is the top arrow at the left there, the individual citizen, unlike the corporation, cannot be taxed for the mere privilege of existing. The corporation is an artificial entity which owes its existence and charter powers to the state. But the individual citizen's right to live and own property are natural rights for the enjoyment of which an excise cannot be imposed. Here's the Supreme Court of Oregon saying this doctrine of law that explains your right to work is a natural right that you are born with, derived from the laws of nature, nature's God. They're God-given rights. You cannot put an excise tax, a privilege tax, on somebody's right to exist. If you got to go to the bathroom, I cannot charge you an excise tax on it. It is your right to go. You have to go. It's a natural function. We need to work. We need the labor. I need to go out and labor even in my own garden. I can't have the government come and tell me that I'm profiting because I grew tomatoes and they have a value. The government wrongly, at the barrel of a gun, interprets everything you do to be some sort of profit. And the government interprets, in Tommy Pryor's case when he was on trial, they got the IRS expert witness to admit that the IRS views your labor as worthless, as zero. There is nowhere in the Internal Revenue Code, 9,000 pages, plus the 20,000 pages of regulation, plus the hundreds and hundreds of thousands of pages of court cases, nowhere in there does it say your labor is worth zero and the money you bring home is all profit. Nowhere in there do they say it out loud. They just pretend with the barrel of a gun. So now, in conclusion, on page 5, the last arrow here, what can we conclude from what the Illinois Supreme Court said on the Illinois income tax that the tax is a privilege, it's an excise tax. That it is applicable to privileges only, such as doing business in a corporate capacity. 3, that the citizen's right to labor is not a privilege that is the subject of the income tax. 4, that the citizen's labor is property not subject to the income tax because it's not a tax on property. And 5, that the citizen is the source of his own labor and not subject of the income tax. That's the words, the final word of the Illinois Supreme Court. And when, as we learned, well-established doctrine of law, that when the Illinois Supreme Court analyzes a statute, it becomes part of that statute and is the final word on it. Even the Supreme Court cannot analyze and turn over the Illinois Supreme Court's opinion of a state law. The state Supreme Court is the final word on the meaning of state law. You cannot go to the Illinois Supreme Court on that. You can go on other federal questions. You can go, even if it's in the state court, you can go violations of your civil rights, blah, blah, blah. But when you're challenging a state law, the Illinois Supreme Court is the final interpreter, not the federal Supreme Court. They can't even hear it. And the final word is exactly what we concluded here. It is in black and white. And in conclusion, okay, we're going to take a question 1 second. In conclusion, I challenge this. Stop paying, go right through. You go to administrative court, which is a kangaroo office in the Illinois Department of Revenue. The guy you're talking to, the guy you're challenging, the expert, he doesn't even know what this is. He's never read it, doesn't care. Shut up and pay. They just tell you, move on. Then you go to the district court. I had a lunatic judge. This is a judge now in the Illinois District Court, as dumb as the day's long. She says, you have to file income taxes no matter what. I said, Your Honor, if I have no income, I don't have to file income taxes. She goes, yes, you do. Even if you don't have income, you have to file income tax. This is Judge Rita Novak. And that was so ludicrous what she said, that the state's attorney chimed in and says, no, Judge, if he has no income, he doesn't have to file an Illinois income tax. And the judge was like, really? I mean, this is the person who's supposed to be judging the law that I'm appealing to. Well, I went even higher then. Of course, she just said, no, you lose. Move on. So I went to the Illinois Appellate Court. And they do what they always do, change the facts, misrepresent the law. You lose, and then they do what's called a Rule 23, which means it's an unpublished decision. Nobody will see it. It's not in the books in the library. It only exists if you want to go up to the 14th floor past security and pull my case. That's the only place you'll be able to read it. That's their tyranny's strategy of hiding these bad decisions, and they do it by the thousands. So, Mike, come on up. Let's